Welcome, everyone. I'm Amy Seeley, president of Seeley Test Pros and Leap, helping students to succeed in all kinds of tests from 8th grade to grad school throughout Ohio.
And I'm Mike Bergen, president of Chariot Learning, helping students with test, school, and life based out of Rochester, New York.
Between the two of us today, we have over 60 years of experience at the highest levels of the test preparation and supplemental education industries.
We both love to talk and learn about the latest issues in education, testing, and admissions. So let's get down to tests and the rest. The fascinating topic we want to explore today is financial aid horror stories. But first, let's meet our special guest, Howard Freedman.
For over 20 years, Howard Freedman has empowered his clients by teaching them how to make objective decisions to evaluate the most affordable colleges and other forms of career development. He graduated from the College Board's Financial Aid Institute and completed ongoing training with experts from college financial aid and admissions departments, which helped him gain a better understanding of how colleges operate. He was recruited to oversee the Access program in the Boston Public Schools, broadening his experience by providing financial aid services and scholarships to over 2,700 high school seniors at more than 20 schools. He was a member of the Massachusetts School Counselors Association and the Massachusetts Association of Student Financial Aid Administrators, where he connected with college representatives and guidance counselors to gain diverse perspectives on higher education and student support. He is also the author of Making College Happen. Welcome.
Thank you very much. I appreciate the opportunity to participate in this podcast.
Howard, we appreciate you spending some time to share financial aid horror stories with us. Before we get into those, though, you have a really long, extensive history around college admissions and financial aid. We'd love to hear a bit about your journey and what exactly is College Board's Financial Aid Institute?
Part of that is when I first began is to learn the ins and outs of financial aid, mostly from the perspective of what a college is taught. So it's a good learning experience to find out what they teach financial aid advisors at colleges. And I just listened to copious notes, participate in the exercises, kind of put myself in their position to see what they look at, what they consider, what are some of the obstacles, because it's very important to know what other people do so you know the most effective way to interact and learn from them in the long term.
Yeah, absolutely. So you've been in the financial aid world for decades.
Mm-hmm.
Why? What drew you to this field and what keeps you going?
I think the most important thing is knowing that I'm helping the next generation of students by imparting my wisdom and knowledge on them, which goes far beyond what they may read online or in books. I have practical experience, and every client that I have is a new challenge. And I love challenges. I like doing puzzles. I like auditing information. I like picking up the things that are not as obvious to the common person not familiar with the process. So, in effect, what I try to do with my background and my background as a consultant, writer, etc., is look for the right opportunities for that particular client. And everyone is different. It doesn't really make any difference who I talk to, their financial means or whatever. I try to look for solutions. And I also encourage them, never ever give up. Don't give up. Don't think you're inferior to somebody because you didn't get into a top college. Learning is there for everybody. There's over 5,000 schools, colleges in America. So there has to be a place where you can learn. So that's that experience, that knowledge, how to talk, how to communicate, how to appeal. Those are things that we cover on a personal basis. And that gives me great satisfaction. What I do is not about money. It's about helping people. That's what I love doing.
It's funny how you talk about kind of solving a puzzle, because I think one of the things that a lot of people don't really understand or know about financial aid is that it's like not always, it's always apples and oranges, right? Like every family, every situation, you cannot go on information that one family has because they're going to evaluate you differently. And so I think that's the trickiest part is you can't expect that one family situation with financial aid you can replicate that with the next family. So it's interesting that you kind of, I think that you point that out. And so this conversation today is going to be really interesting because obviously you want to share about some of the and it sounds scary, but financial aid horror stories. So let's talk about how can failing to report reportable assets on a financial aid form reduce financial aid. So talk about that connection between when people report their assets and what that turns their financial aid into.
Okay, let me share a story which I think is very important and meaningful. I had a client who was a average paid employee. He had a son going to college, and I was helping him complete the forms. Everything was fine until I got to the assets. And I said, wow, that's a lot of assets. Oh, that's my mother's money because she's going to an assisted living home. And she asked me if I could hold it for her so she can get into the home, save some money, et cetera, et cetera. I said, well, looking at your tax return, it's under your social security number. So it's your money. And he's arguing, no, it's my mother's money. No, it's your money because you took it. So your mother is going to enjoy the assisted living home. And now the form is going to show all these assets, and that's going to knock you out of the box. So a thing to learn, because with my horror stories, I always talk about it, is just really be careful and look at the impact of any transaction or any way to hide assets, because when the colleges look at the forms, they can kind of figure out that you have assets.
Would you mind defining a little bit, like, I mean, in terms of what you mean by assets, like tell us more about like what kinds of assets are we speaking of here?
Well, the assets for the FAFSA form, because there's two forms, are savings, checking, investments like in mutual funds. They exclude assets such as retirement or deferred assets that are sheltered. So that's the main thing. They do not include your primary residence. They don't include your car, but they focus on things that are liquid and can be used to fund colleges.
So, for example, like Mike and I own small businesses. How does that factor into is that considered an asset on a financial aid form?
The forms
Depends on the business.
Yeah.
well, the forms pretty much now they're in a constant state of change. That is not reported if you have less than 100 employees. However, there's another form called the CSS profile, and that form is used by certain private colleges that will ask information about your business. Because in effect, people have businesses that's their source of income. So it's not like you're going to liquidate your business to send your child to school. So that really doesn't factor in on the FAFSA. They may ask about the business on the profile, but it should have little impact on a family's financial need.
And so, what advice? I think that if we hear horror stories, right, we want to figure out how we can avert that catastrophe in search of a happy ending. What advice can listeners take from this in terms of managing reportable assets? You're kind of talking about families being caught between a rock and a hard place.
Okay, the best way to explain that is to kind of take the FAFSA and divide it into four quadrants. One quadrant would be the student's information, which is usually pretty insignificant. The important thing is the big driver of a FAFSA form is income over assets. Income over assets. And the reason for that, to give you a quick overview, that income from a parent is assessed at between 22 and 47%, used to go into the basically the determination of how much a family can pay. Now, assets are only at 5.6%. Okay. So basically, a person that has assets might want to look at it and say, "Gee, this really doesn't affect the FAFSA as much as my income." And then maybe a year, I'd say a year before they start filling out the forms, they should go to a financial planner and accountant and find out the best things to do in terms of making sound financial investments without impacting the financial need for financial aid. So I think it's a person. And then the other most important thing is when doing a form, your assets at the time the form is completed is what's counted. So you should take advantage of the window and see what you should, what you should do, what assets you should hold onto, what you should spend, um, and look at the long-term picture of how your assets need to work for you.
So actually what you're saying is on the day I felt the FAFSA, if let's just say I made a big payment to something and that money depletes, let's say a checking or a savings account. But let's say in 2 months, all of a sudden there's more money back there. It doesn't matter because that particular day, those were the funds that were present in the accounts.
Yeah,
Or not there.
that's true. But again, you want to look at it, you want to time your payments. You want to make sure that if you plan ahead and say, okay, I have a revolving uh, charge account that I have to pay every other month. The key that colleges look for, the red flag is this family reporting interest on their assets? Because if they do, that's a red flag that you have some assets. But again, remember, the FAFSA is based on prior year's income. That's already a done deal. But the assets are based on your assets at the time the form is completed. So I mean, you can take all your money out of the bank and give it to me and have nothing, which you can do. I hope you do
He'll be
that.
sharing his Venmo at the end
Yeah,
of the episode.
all the big money from doing this podcast, you can give me all that money. I'm just kidding. The lesson is I'm not getting paid for this. But I think you have to look at it that way. I think planning is very important. Don't be hasty. Don't go out and spend all your money because you think you'll get more aid. That's not necessarily true.
Okay, and on that note, uh, there's probably a penalty for failing to report assets, right?
Yes, I'll give you another quick horror story. Had a client, he kept getting money. Matter of fact, he was a professional poker player. That was his job. And every year he would give me the information to complete the FAFSA. But one year he was really angry at me. And he said, they took away all my financial aid. I said, why is that? Is that, oh, I didn't tell you about all my poker winnings and all my assets. And they said I was being dishonest on the form. He blamed me. It really was him because he should have told me and you should put it on the table. If it's there and there's ways of explaining it, it's better than doing that than hiding it. It
Yeah,
really is.
you could say that they called his bluff.
They did. They did. Exactly. Exactly. He had to cash in all his chips, but didn't go in his direction.
We can keep going with this.
Yeah,
Okay.
okay, let's move on. What about unexpected windfalls? Like we're talking about assets and we're talking about how the that money isn't always a benefit when you're looking for financial aid. So what about say an inheritance or
Mhm.
grandparents giving money to their grandchildren?
Okay, there's a couple of things in there. One, schools should be notified if there's any exceptional situation, which is not the norm. So let's say one year you won $50,000 and you invested it. The school should know that is not the norm because you're not getting that every year. And you should explain it to them that this was a aberration, so to speak. As far as grandparents, that's interesting because grandparents that contribute to college, their contributions are not included. The mistake that's made is grandparents give the money to the grandchild. And by doing that, the grandchild's assets are assessed at 50%, I believe it is. So they have a higher weighting. If I was your grandparent, which I probably could be, um, it's better to give it to somebody else or put it into something, but don't give it to the student because that's going to count as a student asset.
Right.
So again, good intentions, but a bad execution.
So would it be better in like, well, I know grandparents can put money into a student's 529 plan. So
Yeah.
would it be better for a grandparent to put the money into a 529?
Yeah, it'd be great, but you don't want, the whole point is you do not want to give it to the
The
student,
student.
just count it as one of their assets.
So talk a little bit about, you know, how can failing to establish accountability lead to family stress in this process?
Okay, again, I'll add another quick horror story. This was a situation where a student wanted to go to music college, okay? He was very talented, a good player, and um, his dad was a custodial parent, didn't have much money. So he cashed in his retirement. He took a huge loan, and that was it. Well, at the end of the academic year, he found out the student flunked and he had to start repaying all that money. Um, there's two lessons here of accountability. One, parents should be aware of how their student is doing while they're in college. There should be accountability. If I'm going to give you money, I want to know how my money is being used if you want to go to parties or if you want to learn. Uh, the second thing is your heart should not rule your rationality. There should, at the time that money is, finances are discussed, it should be clear as to how much the student is willing to carry on loans, how much the parent is willing to pay. And again, it shouldn't be one, a parent pays everything and the student pays nothing. They both have to have their skin in the game, so to speak. So it's very, very clear what the responsibility is, but it's also important to communicate to know how well the student is doing. And if they're not doing well, if they don't flunk out, then maybe more of the financial burden should be put on them. But these are things that should be discussed before acceptance, before, not after acceptance.
Yeah, that's that pivotal period, right? Where you get your acceptance to a college and obviously you get your financial aid award letter and you can see what you have to pay. And I think there's that pressure, like making a decision that's emotionally like this kid wants to go here, right? And so all of a sudden, everybody's trying to circle the wagons, figure out how can we pay for this. And so people take on financial responsibility, i.e., parents often, that you're right, like the thought of putting so much money down on my student and then all of a sudden they don't even get credit because they
Yeah.
flunk out.
Yeah.
That to me is like, and obviously for parents, you're putting away money for retirement. And so if you're losing your money, that's going to impact your, later retirement days. So
Yeah.
it's a real, it's scary how much sometimes families will leverage the parents' financial future
Mhm.
for the child's, education. It's a tricky thing. It's a tricky thing.
Mhm. Sure.
Very stressful nonetheless, right?
Mhm.
Talk a little bit about how can getting a jump on these financial aid forms turn into a timely mess for families?
Okay. The important thing to remember is October 1st, October 1st, because that's when the FAFSA and profile are available for the following academic year. Okay, so that's the key date. Horror story is I had a client that called me, and she was upset because she said, I did the profile and I did the FAFSA, and the school tells me they never got anything from me. My daughter did not get any aid. Can you help me? And I later learned that the parent thought by doing the forms early, she would get a jump on it, but she didn't realize that that was the current year's form. So when you go online, there is a period of time that you can do the current year. And let's say this year was 25, 26.
Sure.
So the form is still there. So she said, I'm going to do it now, and I'm going to beat everybody, and my child is going to get more aid. What she didn't realize is, as far as the school was concerned, she got nothing because she wasn't even accepted to the school.
Yeah.
And we had to write letters to the school. I said, you have to wait till October 1st, and we have to use the prior year's tax return. And sometimes people take their frustrations out at me. And she's like, that couldn't be true. That's
Right.
awful. I went to a seminar and they said, do the forms early.
Well, and like
Yeah,
you're saying, this is one situation where the early bird does not get the worm, right? Like, because you don't, right? That pivotal deadline is it changes what year you're requesting aid for. So, and those dates, even I always say, they've changed a little bit in the last few years. So for some families, if they had an older student, you know, there might have been a different deadline years ago than there is now. So they have to be very careful, like you're saying, like what those deadlines are, because don't be too early.
Yeah, and look, I would just say in conclusion, some people, I think this whole process, some parents are just overwhelmed. So I really think the important thing is don't try to outsmart a system that's built a certain way to identify what they call conflicting information. So again, as I mentioned, interest earned, failing to report things, I'm not going to help you. Just be honest about it. If you have to explain it, if you have to explain the windfall, if you have to explain certain situations, be prepared to explain it, and also be prepared to appeal it if necessary.
That's fantastic advice. Well, listen, Howard, I know we can talk about this topic all day. Unfortunately, we are out of time. Thank you so much for joining us.
Well, it's been my pleasure. It's you have a terrific organization to help people as I try to in a different way. But I respect you for what you're doing and how you're helping our younger generation be successful.
It's kind of you to say. If listeners would like to get in touch with you, what's the best way for them to do that?
The most direct way is to go to my website, financialaidconsulting.com. And from there is a link to communicate with me.
Awesome. We hope you enjoyed this discussion as much as we did. Be sure to join us for another fascinating topic and guest on the next Tests and the Rest.
Did you enjoy this episode as much as we did? Find expanded links and more for this and all of our episodes at our show page at testsandtherest.com. While you're there, be sure to explore everything the larger TestBright site has to offer, including real, expert, unbiased answers to the toughest admissions testing questions. Of course, we'd love for you to rate, review, and subscribe to Tests and the Rest on your favorite podcast platform. If there's a topic or guest you'd like us to feature, just let us know and spread the word.